welcome to this week's actual free episode of the Lumber Word, episode 140. Appreciate everybody showing up. It is, what day is it, guys? The 24th, which is Wednesday. And we're just getting going here. So would like to also thank Dustin Gilbert from Fast Markets for being on again, a recurring guest. Thanks, Dustin.
Thanks, Ash. Great to be here again. Good to talk to you guys.
Welcome back. So a lot happened in the lumber market. What we're going to talk to in today's show is a little bit about production, a little bit about new home sales. But first, let's go round the horn and let's start out different. Let's go with Charles this time. And Charles, just because we're not behind a paywall, you can still give some good information out here.
Look, part of the information that I give is my charming personality. Okay.
True that.
What are we talking about? Pine?
We're talking about Southern Pine. We can beat around.
Gone, monster discounts are gone. We're closer to print within $5 or $10.
I saw 12 inches moved up now for a week.
Well, it only took a year.
Yeah.
Only took a year, man. Only took a year. Too wet.
Well, we highlighted it on the show there, 3 or 4 weeks ago, that it was like the screaming buy, and you just put it in the shelf, and it's going to be good for $200, $1,000 by spring.
Yeah, you picked up $5.
Yeah, so far, right? It hasn't even shipped yet.
Oh, then you're winning all the way around. No cost associated, no opportunity cost, no interest. You're right, Greg.
Right there, you go.
Solid advice.
So. Charles, I'm going to ask the same question. It probably hasn't changed. Mill order file still 2 weeks or sooner, or sooner, right?
Yeah, or sooner is probably the key to that. The big thing is buildups are gone though. And I've had that conversation quite a bit. And when those buildups did exist, those discounts were pretty heavy.
So explain to the listeners. Explain to the listeners at home what the buildups are.
Buildup is when a mill has too much wood and they have nowhere to go with it.
So 2 weeks ago, a week ago, we were talking. That's where they kind of blew that out. That got in what accounts for the for all that being gone? Everybody across the pipeline bought treaters, all the above.
I think he moved a lot over to the Midwest. Honestly, took it out of their market. And a lot of guys stocked up on it because of the price discrepancy between species. And then you had guys that kind of sold forward and stepped in and bought some volume. We were kind of one of them. We were a very, very active participant in that. Very much so, for about 3.5, 4 weeks in a row. And bought a ton of wood. But a majority of it was already sold. So, now you've got this weird gap in multifamily and just, everybody looked at single family housing. And we're in a positive scenario, but I think there's a lot of people that did participate in that, right? In order to get it gone in 2.5, 3 weeks, right? So I don't know the urgency to buy the back half of the year.
Was it the kind of the result of that, Charles, was both buyers and sellers kind of, the sellers were expecting to get better prices when the duties increased on Canadian lumber, and
it was the same thing that y'all are experiencing in Spruce with the buildup or the wall of wood, right? And reloads and them shipping wood over and then, obviously slowing that down. Same thing, right? Because they want to capture appreciation. They got appreciation. I had a conversation in late August, early September, and I was buying some 2x4 16s. And, one of the comments that was discussed was 90 days ago, 90 to 120 days ago, we were selling 2x4 16s for $585. So,
why are you selling them for $300?
Yeah, that's pretty damn close. But I think it was a combination of everybody being emotional to the tariff buildup, buyers saying, I don't want to overpay, so I'm going to overstock. And then mills saying, I don't want to undercut myself. So we're tapering back our order file, or not our order file, but our sale window, as they like to describe it, which created kind of a perfect storm. I had a conversation this morning, pine in general, and I think markets in general this year have been overly emotional, right? We've made decisions based on political or economic things that may or may not happen, which has put all of us kind of in a unique situation because, quite frankly, 95% of those things never happened. So, outside of the AD/CVD scenario for y'all that are in Spruce and some of these curtailments, I mean, that stuff was expected, right? I mean, those things were expected to happen because that was a federal, not just a presidential, hey, this is how I'm going to swing the stick deal. That was something that was already discussed 12 months ago, right? So it was kind of a dead end, right? So it seems to me that the market is fatigued as a whole because of that.
I mean, I guess
honestly.
my question.
This is hard for me to be honest, Ash.
My question is going, okay, so if we acknowledge, we say, hey, okay, the discounts are gone, the market's, closer to print. So, I mean, the first rule is, the market has to stop going down before it can go up. Okay. We're moving, over the next 30 to 45 days, we move from seasonal weakness to seasonal strength in lumber prices. And my question, I guess I'll switch it over to Dustin right now, is do we have, update on the latest, what's the latest update on what's happened in Southern Pine production? What's the latest update that we have?
Yeah, I mean, when you look at the production data, the industry production data from the WWPA and StatsCan, and, what is interesting and not surprising, but when we look at the U.S. production, even though the demand is probably down, we think it's probably going to be down somewhere 2 to 3% this year, in terms of actual field consumption. U.S. production is up 0.5% to year to date, 0.5% to 1%. The data kind of trickles in a lag fashion. We've got, say, July data for the West, but we only have June data for SYP. But, we're somewhere between 0.5% to up 1%. Canada's down something like 5 to 6% year to date, right? So, some of this on the Canadian side we knew because of all the sort of asset closures and rationalization we've seen over the last year or two, right? But it is kind of also still a case that, pine production is almost certainly outpacing demand growth, right? It's either flat to down, right? So, I think when you think about just the market itself and also the industry data, when you look at production versus shipments, is outpacing shipments. So we know that there's been a buildup of inventory, somewhere in the supply chain. I've talked to a lot of our customers and just contacts out in the market. I mean, certainly a lot in the distribution centers is a big piece of the conversation, but I think there's also just been a big buildup at the mill level. I think, we don't have very good data in the industry, not very timely data on inventory. But I think when we get, August and September's data for inventory for both, both on the U.S. side of the board and the Canadian side, you're going to have seen pretty big builds in both cases. So I think there's just wood everywhere. So.
I have a question for everybody is and then you can correct me if I have the wrong assumption. My assumption is that you get production data and you get shipment data, and that difference is what you interpolate the inventories to be. Is that correct?
So it depends. In terms of when you calculate what's at the wholesale and retail channel, that's correct. So when
no, I'm talking about from mill production. If I get mill production and I get mill shipments, and that running tally discrepancy is what inventories are. You had at some point you had to start.
You can calculate it.
Yeah.
You can calculate it that way. But for example, StatsCan does have an estimated reported inventory level in their data too. Although they even specify in the data, they basically have a little asterisk saying use with caution because the quality of the data is not as good as the production and the shipment data.
It would seem like there should be some sort of some energy around, there's I don't see any reason why, if, the WWPA and SFPA can't, and can't come out with the data more timely, right? I mean, it's hey, it's pretty easy. The mill says, hey, this is how much we produced and shipped this month. They know that data on the first of the following month, right?
Well, yeah, I mean, yes and no. I mean, look, it's a very fragmented market, lumber, right? Like there's a reason that, I think it comes out last compared to the APA data. There's just more mills that you have to track down and get that data from, right? So, especially, Southern Yellow Pine, which is arguably the most fragmented, right? So, and I don't want to comment on kind of how their collection process is, because it's great data. But there are times it would be great that if it was more timely. I also look at other.
I think that would be something good for the industry as a whole to have a better, better.
Oh, good.
Oh, we're gonna have to upgrade his pucks.
Was that me or is that?
Well, the one I'm happy Greg froze because I got a question.
I thought that was me for a second.
Oh, no, you're good. So my question is,
I think I froze up there, guys. Sorry.
Yeah, thank you. So if you're saying U.S. production is up half a point to a point, field consumption is down anywhere from 3 to 4. So really, the production, the oversupply is 4.5 to 5%.
Well, no, because
is that fair?
It's being compensated for by the loss of production out of Canada, which is substantial, right? That's down, 5-6% year to date, right? So, the U.S. understandably is taking.
But how much of that is covered by Euro, though?
Well, some of it, but Euro is up. I'd have to look at Euro's up. I think Euro is up a little bit year to date. So that is,
really?
That's part of it.
That's a surprise. That would be surprising to me, given what we see at ports and what we hear, from what what we see from.
What's the lag on the Euro?
On our end and what the ports are telling us.
Yeah. Sorry, what were you gonna say, Ash? Yeah.
What was the lag on the Euro? Is that up to what point, Dust? Are you tracking Euro up to what month?
No. Well, so the latest data point I probably looked at a week or two ago was July data. So we might even have the August data right now. So to your point, it's been a few months here, a month and a half, where that could have certainly pulled back. But I think year to date we are up on imports. I'd have to double check, but I think we are up. So
we did surge a little bit, didn't we?
Yeah, I'd be interested to see that number for sure. Sure.
It's not a monster increase.
So then what's the real? Yeah. So all right. So if my assumption at 4.5% is wrong, then what's the real number? How do you extrapolate that data?
And then I'm going to challenge the consumption number.
That's going to be behind the paywall, Charles.
See, everybody wants my information, but you don't want to share it with me.
First rule of Lumber Club: don't talk about Lumber Club.
If you want to go, demand side for new housing, maybe you're going to say it's lower because the average home size is smaller. But repair and remodeling, that's a number that I generally assume grows at. It's kind of a number the same as GDP, right?
That's reasonable.
GDP's up 1.2%. New homes, housing starts are flat year to date. Industrial rounding error. So I go, well, my number says consumption's probably relatively flat from last year, maybe marginally lower.
Look.
Then we're severely. Then that overproduction is a hell of a lot more than 4.5%.
Yeah. So
if that's the case.
So Greg, it's. I'm sorry. Go ahead, Charles.
When you think about it's a bigger factor in the market is there's production, there's consumption, right? And they're always seeking to find equilibrium, but the overlay on that is inventory accumulation and distribution.
Yeah.
And we've just gone through a period of six weeks of inventory liquidation through the pipeline, right? So, that apparent demand was 50% of what it should have been because people were liquidating inventory.
Mm-hmm. Right. Yeah, no,
flip side that and go, hey, what happens when people accumulate inventory? Yeah. We saw that in two spikes in the first half of the year in front of duties, tariffs, et cetera.
The way I explain this,
but those are emotional events.
No, it's okay. The way I explain this, right, is the reason we have, what seems to be a pretty big accumulation of inventory. The first half of the year, and I think Charles kind of talked to this about how, we've had a lot more price volatility the first, let's call it whatever, half to 2/3 of the year. Some of that has been goosed by risk of tariffs. the duty increases have been mostly known, but obviously the market has to gravitate higher just to keep some of that Canadian supply in, right? But the thing is as prices have gravitated higher, no one's actually paying the tariffs yet because they weren't realized. And obviously the duties are only fully put in place starting, the 35% combined in early August. So mills have been running this whole time, right? Even despite all the uncertainty around the tariffs and less so the duties, but just we've known this was coming. So, I mean, what's remarkable is last year, you look at the industry, we had, 3.5 to 3.6 billion board feet of asset closures in a roughly 70 billion board foot market. This year to date, there's been almost no closures until, curtailments or closures. So, I mean, if they're not closing, of course, there's stuff that's happening quietly, no doubt. But mills, for the most part, have been running. And again, that's why I say, and you could be right, Greg. Maybe field consumption is closer to flat. It's possible. I think when you start factoring home sizes and things like that, it starts to look a little bit worse. And I think repair and remodeling is probably more flat to down. I think the wood intensive projects are not up this year. That's kind of our take right now. But all that's considered, I think demand is okay, but mills have just been overproducing relative to where field consumption is at in the market, and the prices have basically been driving that. When we have 550 per 600 or 600 per thousand, FOB, there's not too many mills that aren't at least making some cash on that, in the market.
So back to Charles' question then, and we probably are still making that one extra strict more than we're consuming. I don't know. It's probably not 4%, but it's probably not zero either. It's probably not flat, right?
Yeah, I mean, I think it's probably closer to balance than we think, right? I think there probably is, to your point, Ash, it doesn't take a lot of volume to teeter the market into oversupply, right?
It doesn't.
It doesn't. So, and it was interesting to hear just Charles's take that, it seems like some of the, and, you talked about this too, just some of the SYP buildups cleaning up here over the last, 4 to 6 weeks. If that's the case, then that does suggest that field consumption is not falling off a cliff right now. And maybe this is a good segue into new home sales, right? We saw new home sales surge, which, to be clear, and I'm not a government data truther. I think a lot of the government data is actually pretty good, but I think, sometimes you get a bad number. And I think today's number was probably on the higher end of the confidence band, right? But I think, going 650 to 800,000 seasonally adjusted, even if we're on the fringes of the confidence, interval there that you see in the census report, home sales are not collapsing right now. Demand is probably not collapsing in the market right now. Maybe home production is outpacing sales. Like maybe there needs to be a right sizing of housing starts. But
well, Lennar mentioned that last week.
We saw the completion. So does this coincide with the completion number that we had?
Yeah, no. So I mean, I think what we saw was when we saw August housing starts, we saw a big increase in the completion number, and it ties in. There's a lot of these big national home builders. Their year end is the end of September. Yeah, and so it would make sense for them as saying, "Hey, we want to complete, we want to sell, we want to sell these homes, to get them into our year-end numbers."
Yeah, let's stack the numbers.
Which would have coincided also with some apparent like maybe slower demand because you use a lot less lumber when you're finishing up a start than when you're starting a start. And I've had a couple conversations in the last few days about fourth quarter numbers. There's going to be a fairly sizable amount of lumber that's going to get committed for the fourth quarter on the National Builder Program. That's going to have to be, that risk is going to have to be managed.
Yeah.
But how do we not know that's already been managed though? I mean, that's the gray area, right? Because I mean, you talk about these buildups and you talk about, and I'm just specifically speaking on what I know. I'm not a U.S. species, genius here, or Canadian species genius, but if you've got buildups,
South Carolina genius.
I just want to say one thing, Charles. Before when you froze last time, Greg, I don't think anybody fully appreciates Charles thanking you for freezing. Okay,
You know,
all right, we can continue now.
there's just so much big love here. That's the thing. You know what? To my point before, if you're not giving me a hard
you're
time,
right.
Charles, I don't think
Greg,
you really like me.
Ash, I hope you have dish soap to get Greg's head in the door when he gets there after DJ said he was right already one time. And then he mic dropped
Yeah.
the call. I mean, he's on the high
he did
horse
mic
today.
drop, didn't
I
he?
had an emergency situation there. I apologize.
So the real question is if you look at order files and Southern Yellow Pine order files, and you look at sale windows and all these other things that are very in flux and they're very amiable throughout, different seasonal pushes and pulls. But if you had buildups that cleared, and if you look at what's happened over the past 24 months, those buildups usually run and downward pressure usually runs in 6-week cycles. This one ran in like 3.5 to 4. So you're probably 25 to 30% shorter in that liquidation phase versus what it has been over the past 24 months in Southern Yellow Pine. So to Greg's point, I don't disagree with you, Greg, because especially if it's their Q1, they've already submitted year-end numbers. They already have done what they need to do, shareholder, all that fun stuff, right? So now they're going to load up and they're going to basically get ready to go to war. But who's to say those pro dealers haven't thought about that based on seasonal trends and said, hey, I can buy a 2x6 right now for $265. When I know in November, historically, that 2x6 is going to sell delivered at $365, $370. So who's to say a majority of that wood hasn't already been bought?
I don't think it has.
And I say that because it's sitting in a window of this.
Yeah,
a little bit.
Yeah, Matt, what do you think?
I'm like 100% positive that it hasn't been bought. And having just got back from a week down visiting customers and listening to people talk at a convention full of lumber people, I can tell you that the price of lumber isn't going to be driven by the customer's demand going into the next quarter, right? So all the things that have happened this year are behind us, and now people are sort of trying to figure out what's going to happen next. Well, what's happening right now is the phones aren't ringing. And the customer's inventories went from a 60-day inventory to a 90-day inventory because their throughput has slowed down significantly, right? And I'm talking about the customers that I sell to in big markets that have lots of throughput and lots of customer options. And the only thing that's really driving business right now is custom building and multifamily. The single family part of it is dead, or it's limping along. It's not what it was, right? It's not springtime. It's now fall. We're going into winter. We're going into hunting season. We're going into a slower time of the year seasonally. The home centers and the retail yards are not going to rescue the lumber market. The only thing that's going to make prices significantly change upward over a long period of time is curtailments, significant curtailments in both BC. Well, not just BC. I would just say Canada as a whole. And then the yellow pine guys. So what you saw, Charles, was the lowest price species on planet Earth find some new market share over a 4-week window because it was so much cheaper than Doug fir or spruce or hem fir, which of course that's going to happen at some point. Somebody's going to take it in the Midwest. Somebody's going to take it in Texas. I mean, hell, it might even go to Denver. It might go to a treater in Denver.
Yeah, no, it does go to Denver. It goes
so
to
it's going to go to places that it's not historically that market. And then meanwhile, the guys holding the bag on the hem fir, the Doug fir, and the spruce are just going, hey, I need offers. And guess what? Today, all of my mills, every single mill that I buy from has sent me emails saying, I need volume offers. I've got prompt loading wood. So the answer is not.
Theoretically, we're both saying the same thing here, Matt. You just said
I'm telling you,
in a more broad stroke.
We're in trouble. We're in trouble. You guys are stealing market share, and everybody else is holding the brown paper bag with a piece of poop in it. Yeah. So, and then if we think that Lennar and Horton and all those guys are going to come to the rescue in the fourth quarter, I'm here to tell you, it's not going to happen. Okay. So there you go.
So we said the same, Matt, we agree. Can I say, never mind.
I hate to be a curmudgeon, but I'm being a curmudgeon. Sorry.
Matt, this is what we've been, we've been talking about this for weeks now. is that, when you do the numbers, whether you look at, the yellow pine prices, what the current mill net is, Charles can do the numbers on, hey, what's the number of, for raw material at the gate? And that's barely what they're getting for their lumber. So all of their, fixed and variable costs are negative.
Charles can do it
Yeah,
by
and
state.
now not only that,
and by county.
everybody in the industry, Greg, whether it's a end user, wholesale distribution, anyone that carries inventory, and the mills are all looking at cash flow and profitability. They're all looking at that right now because everybody's tight cash again, right?
Yeah.
So we're right back to where we were in 2018, 2019. You can just forget the pandemic ever happened. All that money's been spent. All the mills are standing on their own 2 feet, and they're looking at the economic picture now for the first time in 5 years and saying, what about our cash flow? What about our money utilization? I've got big companies canceling contracts with me in the middle of the year. Because
we talked about the last. You thought we were going to increase.
No, I said
go way down next year.
My theory was that.
No, I was talking about
I said the opposite. I said
my
my guess is that contract usage in 2026 will be lower than 2025 because they can buy that stuff in the open market freely. There's not as much restriction.
You know what I love about this open dialogue, Greg, to your point, and the brotherhood and the lumber club, and first rule about lumber club is not to talk about lumber club. Now, hold on. This is the best part. And I'm happy DJ's here to hear this. You ready? So Dustin gave you credit and said you were right. And then Matt was like, no, Charles. And then went on this splurge and basically explained the same thing that I did. And not one time did he say I was right.
I never said you were wrong, though.
God,
no, I just reaffirming. I'm adding to what you already made clear. Yeah,
we've been having this conversation about about Canadian mills when we look at with a 25 to 35% tariffs in the current numbers, and we look at it and go like, you do the back of the envelope and you go, God, that's got to be brutal. And so somewhere along the line here, somebody in the back office is going to go, hey, at this run rate, we lose X million dollars per month.
Yeah.
How much longer can we do that? Are there things that we can do so that we, where's our sweet spot so we make the least amount of money, the least amount of lumber to lose the least amount of money?
Yeah,
Dustin,
I mean, look.
Yeah, Dustin, what do you think?
I was just going to say, like
per carload, or like you put it out on X a couple of weeks ago. Like, what is it a carload? Like, what are these guys?
Well, I mean, and I have to do the math on the carload basis, but just per 1,000 board feet, the variable cost break even in BC Interior with the 35% duty, it's something like around $550 per thousand FOB, and we're talking about sub 400 per thousand, right? I mean, obviously there's a distribution on that number, right? Like there's some that are lower than
15 to 20 grand a car.
Yeah. So look, I mean, the one thing I tell clients is, look, I mean, we probably we're overdone on the upside of this run, right? And I think, if you were someone who sat on your hands in this most recent price run leading into August, like it's paid dividends for you, right? But I think one thing that I'm confident of is like there's no way prices at this level is a durable equilibrium when the entire Canadian industry is offsides right now, right? Like there's not just by $5-10 per thousand, we're talking $50 $100 per thousand. So like we're there's like major, and Matt said this and I agree. I think the next 6 to 12 months we're going to have a major rationalization of the industry. Is going to be a major wipeout. And demand, we think demand is going to be up next year, not crazy, like 1, 2, 3%, but that's not going to be enough to rebalance the market. There's going to have to be curtailments. And
how long,
it's going to be,
Dustin, how long does this 35% going to last? A year?
Well, yeah, it's going to be,
actually the numbers goes up next year, goes higher next year.
Well, no, I don't think that's true.
Average.
I don't think, no, it's not going to go up next year. I don't think that's right, Greg.
Sorry, guys.
No, I think it's going to go down somewhat. It's still going to be high, but it's still going to be in the 20, 25, 15 to 25% range combined. But the reason it's going to go down is the reference period for AR7 is 2024. And when you look at mill profitability in Canada, it's going to be there's not going to be nearly as many dumping margins as there were in 2023.
And what happened to your prime minister up there? The guy said he was going to give 1.2.
Why? It's not
Matt,
Well, I'm just saying
American
the
citizen.
royal
I'm an American
you.
citizen.
Okay.
He's close. He's
God,
close.
he's as close
All
as
right.
you are.
I'm-
Matt.
He's close.
I'm speaking figuratively here, so not
Okay.
literally.
My great grandparents are Canadian, so all right, that's fine.
The
That's fine.
Canadian prime minister, not your or our, the royal your. He say he was going to give $1.2 billion to the forestry sector not too long ago. Did he drop that promise here or something? I don't know. I read a
That was a
blurb about it.
tagline, man.
So yeah, I mean, I did write a viewpoint on this. So if anybody is is using our dashboard at Fast Markets, if you're a Random Length subscriber,
Love
it's
your
up there,
dashboard.
yeah,
Love
great.
the dashboard. Dashboard's
Great.
where it's at.
So long story short, and I haven't seen any changes on this, Matt. I mean, so it's possible there has been an announcement I've missed or something like that, but I haven't seen any changes on that. From my understanding, a big portion of that is basically loan guarantees. I think it's the 750 million in loan guarantees, and then I think 500 million in sort of basically grants and whatnot to sort of reorient the industry to sort of other value added uses for lumber. So I mean, that those will, particularly the grants, will show up on sort of anti-dumping duty margins 2 years from now, right? So I don't think that money has gotten out into the system quite yet. And from my understanding too, this is not the first time that loan guarantees have been put out there by the Canadian government. I don't know how widely they were used the first time this was done, because when you look at the countervailing duty assessments, it's not a big part of the assessments in the years that was relevant. Because I think the big companies, who have some level of liquidity, are going to sort of finance, through private markets without government support
Or self-finance. Yeah.
Yeah, right, exactly. So I don't know, I don't know how truly impactful that piece will be, but it's certainly, especially the smaller mill operators, like that's not nothing that could backstop them, right? Especially from a liquidity perspective in the near term. So I mean, that said, the last thing I'll just say, I'm still stunned we haven't had more curtailment announcements.
Me
yet,
too. And I'll tell you,
honest.
my theory on that was because I've been talking about this since August, so a good 5 weeks here, expecting significant curtailments to come from several areas, and haven't seen it. And now that I look back in hindsight, I think, well, it makes sense because they all have giant log decks and they got to turn that into cash. And so they're going to pump that lumber through the system and just take their losses for two months or so. We are getting to what I would call a bit of an inflection point here. We've sort of put the brakes on the halt on the free fall of futures. September managed to close up a little bit at the very end. If you look at a chart of the November January contracts, it's trying to form a bottom, right? I'm not sold on that idea yet, but at least there's some dialogue going around the room about, wow, these prices are cheap. Maybe we should buy 5 cars, and then sell the board against them. So there's some things that are going on that I wouldn't call them bullish yet, but at least stabilizing.
Yeah.
But we're certainly not out of the woods in terms of my perspective, sitting here selling lumber and seeing what the mills are doing all around me, including our own sawmill. So we're like in the first inning here. If there is going to be a reversal, it's not here yet, but maybe you can see it coming on the horizon. But I do think the mills are just going to keep on running until they finally get their log and finished inventory down. Now, will that be on October 1st? Because, it's quarter in. Mills all want to get their inventories down. They want to get their dollars up. They're not doing anything different than the home builders are trying to do, right? Have a good quarter. Will it be in November, December when, seasonality it starts to play into their favor? I don't know. I just don't. I'm surprised they haven't done it yet. I'm shocked, to tell you the truth. I would have thought we would have seen a lot more significant curtailments already. The fact that they haven't done it tells me that they need to move that inventory, and they need the cash flow.
Yeah.
And they still have high enough dollar value orders in their latent shipping system from August. And they have enough contract business that hasn't gotten crushed yet, where their sales averages are still not killing them yet. Maybe that'll happen in October. So we'll see.
Matt, I think I was looking at the market and I'm going, so you have you have V bottoms, you have U bottoms, and you have L bottoms. This is probably I hope it's a U bottom, but it may very well be an L bottom, right? I mean, where we're flat down here for the next 3 to 6 weeks, and we just chew everybody up, right?
Yeah.
There's a real possibility of that.
I mean, I do think that it presents amazing opportunities to speculate. I mean, like safe ones too, right? You can go sell the November contract at 580 right now and go buy some cash. Ashley, what did I quote you earlier? 530. I mean, you got a $50 bill in it without even doing anything.
Yeah. And Matt, to your point, almost everything else is undervalued to 2x4s. So
studs are cheap.
Other than 2x4, it's even greater value.
Yeah, I mean, look, this is a speculator's dream environment if and only if you've got your dollars, managed. So if you've got high inventory and your turns are slowing down, it kind of stinks, But if you've managed to keep your inventory moving and you've got some flexibility on what you might want to buy going forward, you're not stuck on one product line per se. Like I'm looking at other things like studs. I'm not a big stud guy myself, but some stud trims are really, 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 really historically cheap right now. And number two, in Tuba 6, any species, number 2 in premium and really good tallies in Tuba 6 are just stunningly cheap compared to Tuba 4. And Ashley's talked about this 8-month cycle. I mean, we're coming up on, maybe in a couple, 3, maybe by Christmas time that'll be equalized. I mean, there's just things that are available.
That's good.
And to your point, if you're buying something and selling November against it, you're not even really speculating. You're really just locking in a profit, and you just need to wait for put it in the oven and let it cook.
We want to put it in the freezer.
Oh yeah, the freezer. That's right. Yeah.
You don't want to
or if you're a sawmill or you're a producer, you can go ahead and sell January at 610. That's the best order you're going to get in North America today. I mean, or 580 something in the November contract. You're not selling your cash at 580. You're not even close to 580. You couldn't sniff 580 in your greatest tally of all time. You couldn't get 580 for a straight 16.
But the problem is that's they're going, that's locking in a loss, and so do we really want to do that? I mean,
if I came to you, Greg, I want to build an apartment, starts around January 15th, January 30th, and I need you to price a whole bunch of Doug fur dimension and studs for me, and you just take a look at print today and add $100, and I go, yeah, let's do that. Would you take that business?
Print
plus
$100 for January.
Yep.
Yeah, because I can.
Charles, if I came to you and said I want a bunch of yellow pine for January at plus 100 over today's prices, would you lock that in with me? Absolutely, and that's what the January contract's telling the mills they can do. Hey, it's plus 80 to 100 over where you're going to get
but the difference is that we're buying, at today's prices and locking that in minus our cost to carry. Where if you're a mill, you're basically locking in a loss against your cost. I mean, it's less, and maybe you're right. This is part of a strategy that's less of a loss than not doing it, right?
I mean, they have to buy the logs in advance of producing it.
But that brings up a very valid point, right? You said, we grind kind of in an L, right, for the next 6 weeks. But if nobody wants to lock in a loss, and Matt's over here quoting 530 and the board's at 583, and there's a $50 discount to cash, when does the board come back to cash like September did?
It might not. It might just stay there.
The last week in October.
I've seen it, Charles, where it just stayed there. I remember selling the
October.
Write it down.
I sold I did a 6-month trade one time where I put lumber on the ground on a rolling deal for 6 months, and I sold 3 different contracts. I sold the March contract, the May contract and the July contract. And by the time I finished that position, it was like 70 cars. When I got to July and closed out the position, the price of futures hadn't changed $1 from where I sold it back in like January. And the price of cash had gone up like $60. So yeah, you can see the board just hold a premium for a long period of time, and then it allows guys like us to sort of work on cash deals.
Yeah, but how many times does that happen and the board doesn't go retrace the cash? Now that we're not in a car market, you're in a truck market.
I don't know.
Right?
It's a good question. We'd have to ask Rob.
These are all variables that I think we have to take into consideration, because if you look at the past 12 months, and I think Greg's even said it, the board's a premium to cash. So and he laid out this ideal scenario, right? And then 2 weeks later, we have a conversation and Greg's like, boom, I was right. See, I told you the board would come back to cash. My basis came in. I don't know how many. I wish I had $1 every time I heard Greg Riley say that. So I'm just asking a question. I'm still right behind the ears, fellas. I'm
just trying to illustrate how it works. That's all. I mean, and when you think about if you look at this year, January to March, $40 to $45. March to May, $50. May to July, $45. July to September, $40. September to November, $55. If you just rolled, I don't know, I didn't just add all that up, but it's like over $200 $1,000.
Yeah, that's not bad.
A quick question. But while we have Dustin on here, I've a question for him. Dustin, you sit in an interesting seat at Fast Markets where you have a lot of people calling you on the buy side and the sell side. And we're all trying to figure this out. So what are the main questions that you've been getting over the last 30 to 60 days from, not to be specific, from consumers and producers? What are they all looking for?
Yeah, I mean, I would put it in 2 or 3 buckets. One is the tariffs / duties, right? Like what is going to happen with those? Because obviously we have various levels of sophistication of customers, some who know very little about the lumber market, right? And they just need what the heck is actually happening? What are duties? Why are there tariffs, right? So that.
Those are the guys you tell them to listen to the show, right?
Yeah, we love you guys. You always get our plug
right here.
So yeah,
okay, that's the first
one
group. Yeah,
I mean, I would say generally, and this is everyone. I would say from the sawmills to the down to the builder to the financial communities, what is going on in Southern Yellow Pine? Why are the discounts so deep right now? And so, I mean, we've spent a lot of time looking at that because, I mean, frankly, when we model, right, when we do our forecasts, our econometric models, it relies on historical data, right? But when you look at the correlation between SYP, 2x4 and, any other species, the correlations now are flat to negative depending on the sample size. Obviously, you got to be careful with smaller samples, but post pandemic period, I mean, that relationship has totally decoupled, right?
Yeah.
So
I think I know why. I think I know exactly why that happened. It's because Charles stopped speculating on lumber and started speculating on cattle. So now lumber prices are just tanking, and my T-bone steak costs $25 a pound.
Yeah.
I mean, whoa!
So what?
I got to get a return on my capital, man. I can't just sit it somewhere and hopefully.
Maybe need some shoes.
What are some ideas you threw around as to why, Dustin? Why?
So I mean, there's a lot of stuff, right? I mean, obviously there's the supply side, right? Disparate trend in capacity growth. All the incremental, I shouldn't say all, but most of the incremental supply that's coming online in North America is from the South. Well, the rest of North America is flat, or if you're BC, supply base is declining, right? So that's the obvious one. I mean, there's obviously the whole substitution question, right? I agree with Matt. There's substitution happening, but there's sort of a speed limit of that substitution to pine, right? There's only so many people, so many end users that want to make that switch and deal with different design values. So many contractors that want to sort of lug around the heavier species, right? So there's all these things. Competition from Euro spruce, in its backyard. I think that's a reality that's grown and grown. The other big thing, and we've been kind of scratching our head on this a little bit as well, because okay, those all make sense. But I think the most obvious one, and it's easy to forget, is that most of the growth in Southern yellow pine demand has been in its own backyard in this U.S. Southeast real estate market, right? Because that's where it's the path of least resistance for adoption. And when you look at the Southeast real estate, we look at national real estate as a whole, the South is obviously more in the dumps than the Midwest, than the Northeast. Maybe the West is comparable. But, if its own backyard is disproportionately worse from a demand perspective, it's getting hit on all fronts from the supply side and on the demand side. So I think, and it's hard to quantify like what percentage of that.
I think there's also been growth in non-construction related usage of yellow pine, right? So the manufacturing of yellow pine has probably improved the quality of it over the last 20, 25 years. Yeah. And so now you've got guys making fascia out of, 2x6 prime pine, and you've got guys, more people are treating it, and you've got guys that are doing cut ups and they're doing remanning, and they're doing a lot more that's not necessarily going to just go right into a 3-bedroom, 2-bathroom house or an apartment job.
It's a great point.
A lot of those usages were formerly Doug fir or white fir or hemlock or spruce, but then I've got a couple component yards, for example, and truss plants that completely switched over to yellow pine, things like that. So the usage of yellow pine, not only has it been growing organically, but it's been able to get into markets that it probably should have been into already, but there was a quality limitation. And they've addressed that in their drying principles and the way they're manufacturing it.
Yeah, and also
Matt is such a Southern yellow pine proponent these days. What is going on?
No, dude. Actually, the reason I thought of that true story.
Specialist, Charles.
No, well, that's true.
I
am your sales rep, Charles.
Why am I here?
I am your sales rep.
What'd you say, Matt? You were going to say
the reason
something?
why I thought of that was because I was sitting there having a lunch at this convention, and the guy sitting across from me was they do treating. They treat all kind, but it's specialty treating. It's not like the Home Depot type treating company. These guys do different types of treating, and they make all kinds of different things. And they basically have 2 lines. They have spruce and they have yellow pine. And in the past, just talking to the gentleman, they never had to use yellow pine up until like the last 10 years or so. And so, I just feel like there's probably growth in those southern markets, just organic, like you were talking about, Dustin, that's not necessarily framing.
Yeah, it's a great point. The
big switch over is between now and the end of the year as home centers look to switch distribution centers from whitewoods to pine in more markets because of an availability and a price issue. That's probably going to be.
I don't think it happens.
That's going to be the biggest. That's going to be the biggest factor affecting the change in relative prices of species as we move from 2025 to 2026. How widespread is that? How deep is it?
I still think you're dealing with regionalization there, Greg, because if you're national chains and you're going to use logistics to your advantage, right? You're going to, okay, well, we got Doug fir studs. We're going to keep those on the West Coast. We got hemlock studs. We'll send them to the Midwest.
Absolutely.
Yeah,
absolutely. 100%. But there's in those fringe areas where some of those products were going, and now they're being pushed out. And that's where, to your point, you're going to have more pine, more distribution moving to pine because of that.
Can I ask you and Ashley something?
Sure.
I kind of came on strong with my negative attitude here towards the fourth quarter, but
it was kind of buzzkill, man.
Yeah, I thought it was
man. At least I had some froth.
I know. He kind of he dresses it up a little bit.
I want to know
from
your perspective, from Greg and Ashley's chair, operating on your Euro and your Eastern side, you're operating in a different region in a different way than I am, or Charles is. What are your thoughts about the fourth quarter? The two of you.
Fourth quarter is going to be. I'll speak for myself. Well, my expectation is that we are going to have to work really, really, really hard not to lose money in the fourth quarter in distribution. We had the benefit of a decent futures hedge in Q3, which has made that okay. But if my L bottom is the case, we're gonna have to sit down here and fight for orders with little or no money to keep our inventory turning, and it's just going to be it's not going to be pretty. I will say we have probably 25% of our normal euro shipments coming in the fourth quarter, substantially lower. You got 2 guys not shipping at all, 1 guy shipping at 50% of capacity or of historical. And I mean, we have one of our Eastern mills is shut down, and the other is running at about 30% right now. So, there's we don't have any help. And I mean,
instead of it normally runs at 40%.
hey. But and selling November at 585. Yes, I'm certainly going to do that because there's $50 a thousand of basis to pick up there. And when I do my report and I say, hey, here's X amount of inventory, if it all goes to the futures price, we actually come out okay.
Yeah.
But if futures comes down to the cash price, I got a little bit of something for the kids, but nothing for mom and dad.
Yeah,
no more Italian vacations for the family.
I had some time to think about it, so that was a good answer.
Oh, you said did you just imply that Greg's every week
that was my take. Yeah.
Every week we come in and we know we know what Greg always looks at days of sale, and we pretty much do it. How many trucks did we sell last week? How much do we have rolling? How much inventory? And you just feel. You can feel it slowing down. Orders are harder to get. And you have brief stints of thinking, oh gosh, there's going to be some curtailments and we feel like the price is going up. And then you put an RFQ out to somebody with 50 trucks on it. And you're like, there's no way I'm not going to get 15 or 10 or 5, and you get nothing. And there's somebody else out there doing something really cheap. And you keep getting inquiries for the fourth quarter from people. You don't really want to hang numbers on it. So you have hope there's going to be some stuff. Positive side, every quarter, we always plan on, very conservative. And I'll tell you, first, second, third quarter this year have been really good. But like Greg said, I don't think we'll lose money as a company here in the fourth quarter. I think we'll actually make some, but we got to figure out more creative ways to do it. Different basis trades. Hell, Greg bought cars at 2x10 spruce last week. I said, Greg, you did because we haven't made money. Once we make money, I'll say we bought them together.
Right.
But it's going to be hard
because the freezer till Q1, Ash.
My feeling is like some of the orders that people are taking out there, like today, yesterday, are below. I think we're pretty good buyers in Eastern spruce and pretty good sellers in Eastern spruce. And some of the orders people are taking, we look at each other like
are giving you the feeling that we're not that good, right? That's what you were going to say.
Yeah. Well, no, it makes you feel like
some of those orders. I think somebody's got a gun to their head saying you have to sell your inventory, or they're just taking a wild short because they've got nothing else going on in their life and they just don't know what else to do. Or it's a mill, and they've got a car to load, and they don't want it. Like it's a one-off. It's not the market per se, but it's a cheap deal.
One-off makes the market in this market.
They become the market in 72 hours. Yeah,
it's a series of one-offs.
Another indication I always get, and when I see one of my customers with an inquiry and I see 5 other people email me over or call me the same inquiry, it's there's not a lot of fish, and there's a lot of there's a lot of lines in the water trolling over top of one tuna, right? And that's happening a lot more. So there's a lot more people chasing fewer orders right now, and I think that's the way we're going to be through. I agree with Dustin. I think we're going to see some things pick up a little bit in 2026. But I mean, the world we all live in, what's going to happen tomorrow and what's going to happen in the next quarter, right?
Hey, Charles, I have a question for you.
I think really.
You.
No habla.
Oh, that's right. You're Cuban. Let me slow it down for you. Charles. No, hey,
Hey, senor.
is yellow pine?
Senor.
Here we go.
Senor Choque.
By the way, I always watch
Mr.
the market,
Charles?
Southern Pine pricing by the amount of buttons Charles has up or down on his shirt. When they're,
Oh yeah,
it's just off the
That's
bottom
funny.
right now because he's two or three away.
Charles, yellow pine is so cheap. Why don't we export it to Europe?
How cheap is it?
I mean, it starts with a 2.
Don't they have
I don't know, but even with a 25%,
25%.
okay, so that takes the price from 200 to 250. I mean, what's it cost ocean freight to send it
y'all
back
can
to
do that out of
Amsterdam?
Allendale. You can start putting it on cars or loading containers and shipping it out of Charleston.
I
that's
think
a great
we should
idea,
just
Matt.
flood the
No,
European market with cheap American yellow pine and just put a bunch of American flags on it and just say, come buy American. Marketing 101.
You know, I mean, you kind of, I know you're sort of half joking, Matt, but I do wonder
totally
about this
joking.
too. No, I know, but I do wonder about this. At what point Southern yellow pine producers are going to have to start thinking about offshore markets? And I know there's not a lot of places you can go. It's really kind of in our own backyard, kind of the Caribbean, Central America. I mean, obviously China's tough right now, just given the trade situation, but it's something that we think about because it's like this excess has to be absorbed somewhere. And at some point, the global market feels like it's a place where it could find its place. But I agree. I mean, it's maybe not going to Europe, but it's something we think about and talk about a lot too.
I don't know.
Places that can absorb.
Look, I'm a huge proponent of Southern yellow pine, but I don't think it'd travel well all the way on a boat Europe.
Sure.
Just saying.
Sure.
Hey guys,
Gotta
this has been awesome.
Yeah.
I apologize for being long-winded. I mean, I
Don't
What
ever
can I say?
apologize for being Greg Riley.
Greg, I
what can
appreciate
I say? I mean, I'm like, now I'm
it.
feeling bad, but and I'm like, oh, shh.
You're good.
I
I
appreciate
mean,
you
even
being you, Greg. Don't
even
change.
Dustin was dissing me there. I mean, wow. I mean,
Dustin,
now that just goes to show you like how he's in the club, right?
Yeah,
When he's
it's always
comfortable enough to do that. I mean,
It's always
that
great
took
to have you on,
cojones.
man.
That took some cojones. See you guys. Love you.
I know what
Love
that
you.
means.